if you treat it like a massage parlor and looking for a happy ending, don't be surprised if you end up with an STD. It's as simple as that. You can't do those types of things. These markets will literally take you out. They'll make you second guess everything, remove all sound logic, and you'll lose control. Like a drunken, promiscuous affair on the weekend that your spouse doesn't know about. You'll be in there doing stuff you shouldn't be doing. So why invite it? Why live your life like that to allow manifestations of those types of things in your trading? Folks, this is your business. This isn't a game. This isn't a hobby. If it is, you're doing it fucking wrong. You're doing it wrong unless this is your business and you're minding your fucking business. You're going to fail. Because you are competing against yourself. And if you haven't removed all the toxic things in your life and found coping skills to allow yourself to be fruitful, balanced, productive, disciplined, do this, don't do that. If you can't do those things in your personal life, you sure as hell ain't going to do it in trading. Who's managing you? Who's your boss? Who's going to reprimand you for losing money? I am honest about where my limitations are, and I have no bones about saying this is where my weakness is. My weakness in my trading is always my excess. I'm never satisfied with them. Does that make me poor of a trader? No. It means I'm honest. It means that I do have weaknesses. I just don't know how to make them better than they are. And when you have frailties, you have to embrace them. Don't try to hide from them. Because the fact that you're trying to hide from them is the same thing that causes everyone to have drawdown, blown accounts, because you're trying to do what? You're trying to avoid that losing trade. That one singular event where it's now taking something from you. You're trying to avoid that. And the fact you're trying to avoid that singular transaction turns into a series and chain of that, and your account's blown. Because you've ramped up your emotional and psychological impact. You've done that to yourself. That singular trade that was a losing trade, you made it now more significant. That trade cheated on you. That trade went outside of the relationships and the boundaries you set for it. And now you feel betrayed. So what do you want to do? You want revenge. You want to go find that motherfucker that cheated on you. And you go out there and you go in the marketplace looking for him. And you don't find him. You find somebody else. And they take again from you. And they take again and again and again. And you're hurt more each time. And it revs up that emotional and psychological impact. And you want it to go away. You want to feel victory. You want to feel like you've done the right thing. Because if you win, you've done the right thing. In your mind, that's what you're going to tell yourself. If you get the money back, you've done the right thing. You didn't learn anything from that. When you should have said, this hurt me. I'm going to take a step back and heal. I'm not going to be in a rush to get into a new relationship, a new trade. But it's uncomfortable waiting around for Mr. Right or Miss Right. Hardships, you're going to have issues where, you're going to feel like you got it figured out. You'll have a week or two, maybe even a month, where you just did everything right. And this is where you get in trouble, young men. You think that you got it all figured out, and then you have a losing trade. And it might not even be a significant loss. It might be something so small, 0.5% or whatever. You save the stock from getting hit full on. Like you had a 1% risk or a 2% risk, and you saved it from getting knocked out, but still it's a loss. You want to second guess yourself so much because you're trying to avoid losing. This is the number one characteristic of a losing trader. You're willing to hold on to a losing or questionable trade. Come hell or high water, you'll hold that. It isn't moving like you want it to, but damn it, you're not letting go of it. Because what happens if you close it and it runs in your favor? What happens if you're fucking wrong and you just held on to it too long? That's what usually happens. See, if your trade is right, it's going to show you right away. Well, the perception of others about them. That's what they're trying to have new equity highs in that. And that's the problem. When you go out and you start challenging people, especially people that have been doing it a long time, and you can't bring those results, that will rattle you, especially if you're a male. A male takes that personal. Again, it's like you're saying that they aren't that large downstairs. That's how they'll take it. That's what it feels like for a man in trading. If they are sizing up with someone else or someone else is calling them or tapping them on the shoulder, that feeling of, I got to live up to that. Because what if everyone else thinks that I can't do this and can't do that? And then what they do is they start doing things that they can't really do. And they are regretting it. My FX books, announcing they're going to do funded challenges, all that kind of stuff. Don't do those things. If you don't do those things, I guarantee you your results will be phenomenal. Because you're placing no image in the results. You have no expectations held of yourself. You're not saying, I have to hit 20%. I got to do 10% a week. I got to do 100% in a month and a half or 2 months. All those types of goals are stupid. If you haven't been trading for at least 3 years and you're trying to do some stuff like that, you're really making it more difficult than it needs to be. Versus, what happens if you just try to make 2% a week? Would you be happy if you had a funded account with, I don't know, $100,000 and you tripled it over the course of a year? I mean, how many of you would be like, yeah, fuck you, I don't want $200,000. Are you crazy? $200,000? What the hell would I want to have $200,000 for? That's insulting, ICT. Why would you even ask me that? That's what some of you are basically saying without saying those words. Because you want to double your account every month. What would $200,000 a year do for someone like yourself? Would it change your comfort? Would it make things a little easier? How about get yourself out of debt? Well, you don't have to work very hard to get that kind of result. It's very small little micro moves that you have to do, but when you make them for the week, you have to stop. Don't place any more Olympic feats on top of you. Don't try to live up to everyone's expectations of, hey, you know, you're an ICT student, so you should be out there killing it like ICT style. No. One good trade a week. Do it and be done. It's about making money. It's about making money, folks, okay? It doesn't matter how many little hearts you get behind your Twitter posts or how many fanfare you get from all these other, I don't even know how Instagram works. Whatever that stuff is that would fluff a person up. Those things don't matter. Making fucking money does. Paying your bills does. Being able to eat. Taking care of your family. Paying your mortgage off. How about getting a house without a mortgage? Paying your car note off so that way you don't have to make any payments. New set of duds. Clothes. Doing something for someone that wouldn't expect it. Those types of things. That right there, that is a real motivator. Coping skills.
Ooh. It's about making money. It's about making money, guys. Like, you're learning this to learn how to make money. That's so important. I mean, we're all doing this and we're all on a journey. That journey has levels. There's different people here, different folks. We're going to talk to Synapses Capital. We got Ned's Trades here. We got Hitman, Billy. Sean's here. Ryan's here. I think we're still waiting on Mark. It's fine. But in the meantime, Hitman, what did you just hear? How are you doing, brother?
What's going on, man? Yeah, I joined a little late, so I just caught the tail end of that. I'm just trying to get set up for the morning.
Right on, bro.
So, I haven't been on Twitter too much lately, but I'm trying to stop.
We got crazy love for you. I know you're putting in a lot of time and energy at Liquidity Inc. So, props to you. Props to all the work you're doing there. Lots of love. I know you guys are crushing the turtle soup model. You with your power of 3. How are you doing with, these gold bot level, the CEs, and how price reverses off the CE levels? Ooh, that slaps. That slaps, bro.
Yeah, man. All is well, dude. All is well. Yeah, I'm sorry. I just woke up.
No, dude, you're good. I know it's Central Standard Time. I'm on my second cup of coffee. I'm definitely caffeinated. So,
my wife woke me up off the couch and I fell asleep.
Ha, bro, I'm the mayor of that town.
Oh my God, man.
I totally feel you there.
Yeah, man. No, it's Friday. I believe it's OPEX today, and just see what happens. I know Powell speaks at 11.
Yeah.
As far as what I'm seeing is on Power 3, we're sitting in the stop run area, at least on US 100. I'm just gonna wait and see how this plays out today. Just watch it. I saw you're doing the spaces, so just wanted to hop in and say what's up, man.
Right on, brother. Right on. I'd love to get what's that?
I said you never did text me back.
Bro, I got a new number. I got to text you my new number, bro. And I probably didn't. Life's just extra fun in regards to the logistical realms.
Yeah.
So, yeah, you're probably texting or we're probably...
Else, man, if not more. So, like I said, I'm just stopping by just check in, say what's up, show you some love, support.
Rock on, my man, rock on. We got a bunch of people here. We're going into the 9:30 hour as we speak. We've got Synapses Capital here. We're simulcasting on YouTube, I believe. We've got questions about Ann already. There's some excitement in the air for sure around the predictive analytics involved. I'm excited to bring them up. If you guys want to take the speaker tag, I'm not sure. Can we hear you guys on YouTube? Can you talk? I don't know if I have to hit. I think I might have to hit. Here we go. Hold up.
That might have done it.
Hey, you guys there?
All here.
Hello.
What's up? What's up?
Yo, what's going on? Guys, we're simulcast on YouTube right now.
There it is.
Uh-oh, is there an echo?
I think there might be.
I can hear you guys loud and clear.
Yeah, I think it's great. Yeah.
We're trying out new things here, right? We'll record it.
Splitting both streams up and double checking the audio. So good.
Good. Not too much of an echo.
No, sounds sweet from this end.
Wow, that's great. I love hearing that. So, okay, so looks like we're getting an audio confirmation here. We got Ryan, Synapses Capital, Sean, Future FX, and Relentless ADD. Do you guys mind introducing yourselves to the group?
Absolutely, guys. So for those of you who don't know who I am, my name is Ryan, and I am one of the co-founders of Synapses Capital.
Nice, nice. Tell us more about Synapses Capital.
Absolutely. So what we are is we are an analytic group that has leveraged advanced technology to basically develop proprietary trading strategies. And so I know that you guys know some of us on this team, but we are IT specialists, programmers, engineers, and financial practitioners.
Wow. And what precisely do you guys offer? What do you guys do over at Synapse Capital?
Yeah, so what our team does is that we try and develop robust prediction models, right? And so the way that we do that is by evaluating extensive data sheets so that we can provide retail traders an edge in the market because we know that things are always, evolving and things are quite challenging. So what we want to do is give power back to retail traders.
Interesting. Interesting. Well, this is going to be a phenomenal conversation. I want to introduce Sean and Mark and continue this, Ryan, because it sounds pretty amazing to me. I mean, AI, how it's affecting and changing the finance industry is, I think, quite an interesting topic and conversation. Who else we have here is Sean, Future FX. Sean, introduce yourself. Tell us a little bit about who you are and more.
Sure, mate. What's up? Everyone knows me, I'm sure, from the space. Sean, Future FX. Been around a little while, beat around the bush as it may be. 2018, jumped into ICT. I know a lot of you guys, and yeah, that's it. You have to forgive me as well, guys, because I've got a currently in Cyprus on holiday, so forgive me if it's a bit crackly the line.
He's on beautiful holiday in Cyprus right now. Wow.
But as I say, look, guys, I started my journey back in 2019, and the rest is history. What can I say? What an amazing space! What an amazing platform! And what an amazing company as far that we've developed. And I mean, to be honest with you, what Mark's going to say next is going to blow your mind.
Nice. Sean, Future FX, for those of you who don't know, he is a charter student, was in the private mentorship. He's pretty actively involved in the charter community. So we kind of have the Twitter community, and then kind of behind the scenes, there's a little bit more of like a private mentorship kind of chat or group. Sean's pretty active in that with some of the folks there. And we're a bridge, right? We're a bridge of the community. We're for the people, by the people. And there's levels to this game, right? And within talking about levels, looking at ways to predict and assess your risk is something that all traders, no matter what level you're on, you're looking to do, and you're looking to do well. And any sort of edge there is out there is important to ascertain and utilize. Confluence, blending logical factors is a thing, right? So the more professional you take this opportunity, the skill set, then I think you find adding abilities to predict and assess your risk the way you stay in the game the longest, right? So AI is at the forefront of the conversation today. We're talking AI technology, we're talking trading, we're talking the financial industry, engineers, research and development. His name is Mark Relentless ADD. Welcome to Trader Roundup. How are you today, sir?
I'm doing wonderful, Kit. How are you?
I'm doing great, my friend. I'd like to know more about you.
Sure.
How long have you been trading? What's your background? Tell us a little bit about you.
Sure. So I've been trading since 2012, what most people on this call would refer to as classic technical analysis or retail concepts. And I first found ICT in 2015, and I'm a charter member.
Ooh. So do you like the 3-drive pattern, aka the wolf wave?
Yeah, I was familiar with that before ICT.
Yeah, bro. I mean, I have a video on my page from, I think it was a 2014 lecture that he gave, and it was, referencing street smarts, but with ICT spin on it. And wow, can I tell you, staring at a 10-second chart, a 30-second chart, the amount of drive patterns I find are undefeated. It's undefeated.
That's because every swing is a market maker model.
Yeah.
On some time
It's a
frame.
beautiful, beautiful, beautiful thing. So tell me more, Mark. You've been trading for a long time. You obviously have your own model. You're into coding. How have you? What's your background with tech or with research and development?
So actually, with research and development and tech specifically, I'm not the guru. I'm a blending of minds. I used to do project management too.
Oh! I like it. I like it.
Yeah, so as a project manager, or for those of you who are in the military, like if you're an officer, you rely on your NCOs. A project manager is going to rely on their subject matter experts. You can either learn how to do that as a project manager or you'll fail. So our code team, I guess you could say, as the lead engineer, lead R&D, whatever, my responsibility is kind of bringing that trading expertise and technology expertise together. That's my function.
Ooh.
So we've talked a lot, and there's a lot of talk, and we're very excited to share it. So that sounds all great. What the hell is and what does it have to do with me as a trader from a practical application standpoint, right? So
yeah,
and is machine learning, AI. We're standing by that for obvious reasons. You know what? Maybe not so obvious. We believe that AI is an arms race, regardless of sector, regardless of industry. It's a who gets there first, not when. So with that in mind, we're very reluctant to share the recipe of how we baked the cake. What we are willing to say is that it's a substantial amount of a lot of schools of thought of trading, not exclusive to ICT. Obviously, myself, Sean, we're big fans, right? But there is more to it. I personally have been around the scene for a very long time. I don't want to dox myself, which if Hopi Plok is listening, he could instantly know exactly who I was, but I was the first person he told the gold bot levels to. So been around a minute. If we're not going to say how we bake that cake exactly, what can we say about it? What are we excited to say about it? I don't know if any of you have seen the blacked out images that Ryan's been posting on Twitter, but it's those metrics right there. Because those of you who are familiar with DR and IDR know that at its core, it's extremely simple. I saw a post from Master not too long ago talking about how a 15-year-old child could do it, knowing the simple premise. We have an 80% likelihood to not close above or below this respective line. That's quantitative technical analysis at its core, based on 20 years of data, if I'm not mistaken. And Ann is very similar in that regard. We're on 14 or 15 years of data with about 15 months of forward testing. And, mic drop moment, 76% likely to be accurate over 9,000 data points.
Wow.
Yeah.
Oh, that's a lot.
Yep.
That's a lot.
And there's more to it.
Machine learning, mapping these data points and creating a predictive analysis tool.
What is the number one thing, and ICT has said this within the past year on either YouTube or Spaces, but what is the number one thing intermediate or experienced traders struggle with?
I mean, I think it's still the draw on liquidity, the overall analysis, the bias, right? Like,
could the draw on liquidity be described as the daily bias or the intraday bias? Would that be fair?
Yeah, I think your draw on liquidity is indeed intraday bias, which is why I also preach and advocate those trying to get 10 handles can frame up that on any given day and still create that high probability scenario for themselves to get those 10 handles regardless of direction based on time.
Bingo. Bingo. And that right there, to be very specific about what Ann does, is we define a new day as midnight open. And by 4 p.m. New York time, we will close above or below midnight open. No distance, 1 pip, a quarter pip, and we are 76% accurate with that across all 4x majors and major crosses.
That makes sense to me, because if you look at the percentage increase that a market will entail over time, it's going to go up to go down, and then it'll end up being a very nominal increase, either positive or negative from that open or close, right? So
That's right.
I just straight up, we're here talking. I'm a time-based trader. I utilize time and time cycles. The ONS model I think is absolutely gorgeous. It's beautiful. The 5 to 9 is wonderful. For me, the 4:30 to 10:30 6-hour price. 3, 6, and 9 matter a lot. As does midnight, right? But I base a lot of my analysis off the 1800-hour open. I'd be interested, just from different strategies, different conversations, different analytics, where and how that 1800 candle as a true day open, where how that would range, just as a theoretical topic of discussion. That's amazing. You can't go wrong by the midnight as a liquidity level, right? And more often than not, I think you can agree. Your 9:30 price is going to rein into that 1:30 range. That 1:30 range falls into that midnight price. So very commonly you see a first retracement, even within data and data streams and back testing, often that happening. Would you agree,
I would.
Mark?
I would.
So finding patterns like the 9:30 price running into the 1:30 price, or the 10:30 price running into the 4:30 price, running into the 4 o'clock price, and then being able to measure these ranges again on time cycles. I think what's so beautiful with what the currency merchant has brought to advanced ICT within just regular discussion are these time-based ranges. And I think too many people trade price ranges and they don't trade time ranges. And that's where I think they lose probability to their trade plan. So anyway, I digress. I think time is a very important component. AI analytics is also an important component. I wanted to introduce Rodrigo as a co-host of mine on the Trader Roundup team. Rod is a trader coach. He works closely with Jade and I with funded traders, and he has his own content that he posts here. Mindset Mondays is a podcast he does. He did a stoic conversation this past Monday, and he's here with us today. Rod, what's going on, brother?
All good. Thank you very much, Kit. This is a really exciting conversation, and so I'm really, quite intrigued to see where this conversation goes and how we can. I've got some ideas when it comes to AI and psychology that I would love to be able to discuss with you guys. So what's on the agenda for today?
Well, the agenda today is we're talking Synapses Capital. We're introducing them to the community, and we're trying to give these leaders, these founders, the opportunity to really explain who they are, what they're about, what they see within the space as kind of the tip of the sword, as kind of the leaders, I believe, in this space right now within the Twitter sphere, collective consciousness. So, Rod, I want to bring it right back to Ryan, and I want to ask Ryan, where does he see AI analytics? What is the future? Where are you at, and where are you going? Please provide a vision to us, please.
Hey, sorry, mate. My mic was cutting out. Sorry, my headphones were cutting out a little bit there. Is it okay if you repeat that question?
Yeah, sure, not a problem at all. As a visionary, as someone who is envisioning a future for and with Synapse Capital, with the technology and the AI and the analytics and the data that you're utilizing, where do you see yourselves in within this industry over the next few years? So what's
It's a
your
great.
vision?
That's a great question. So, I mean, our philosophy at our group is that we want to take it one step at a time. So, although we do have some dreams for about 2, 3 years from now, our main focus is developing prediction models that can benefit retail traders. Because right now, that's our commitment. Because when all of us, so what brought all of us together was that we've noticed gaps in the retail trading industry. And we then thought, how can we create something that can benefit this community and also help us as traders maximize our time in these markets? Because as you said in the beginning, right, it's all about making money. And that's what we want to do is we want to help people make money so that they can live the lives that they've always dreamed of living.
So I want to nerd out on you a tiny bit. When we talk about predictive analytics, we talk about
Hmm.
machine learning,
Hmm.
hardcore data science, linear regression, neural networks. How do you foresee Synapse Capital utilizing these core tenets within predictive analysis and predictive analysis tools that are the markets that we work in?
Right. Okay. So hopefully I won't get in trouble with our lead engineer, Mark, on the call, but we are working on other models that we want to eventually release to the public. Now, I'm going to step out a little bit if it's okay with Mark, but something that we're working on is we're not just working on daily bias, but we're working on biases that can cover a range of time, whether it's going to be a short amount of time or a long amount of time. Is it okay if I share that, Mark? Unless you want to step
Sure.
in.
Those are still being baked on the counter, not even quite in the oven yet. But I mean, go for it.
Yeah, absolutely. So something that we're trying to figure out, right, is like not only do we just want to be able to provide a bias for the day, but what if we could actually provide a bias for intraday? I mean, how much would that increase everybody's accuracy in trading? And the thing though is that some people might be thinking, all right, well, I have this new system coming in. Well, how does it relate to my strategy? And so this is what we love about our products is that we don't want to come in and replace everything that traders are doing to be profitable. We want to enhance what they're doing. So although it might have been stated before, I'd still love to say it again, is that we want to partner with what everybody's doing and not just be an exclusive strategy, because that's actually not what N is in and of itself. Now, some other things we're looking at doing, and this is definitely a little bit more long term, is that we're hoping to eventually automate a lot of this stuff and actually develop a trading bot that's going to have many different models running so that it can analyze the market live and place trades for us so that we maybe don't have to do it for a long time.
And that may or may not be public facing. We're still undecided on that one.
Wow, that's I've heard that behind closed doors. I've not heard that in public. That is some shocking thought. I mean, an auto trader, is that blasphemous to the community? I don't know, but passive income stream, I don't think is blasphemous to anybody.
Can I ask you a quick question, Kit?
Sure, absolutely.
Are you familiar with the gambler's fallacy?
The gambler's fallacy. Please refresh my memory on that.
Sure. Let's skip the boring math and get straight to it. The gambler's fallacy suggests that in a random data set, right, that if you have, let's say you're rolling a dice and you roll fives 3 times in a row, the gambler's fallacy suggests that you are just as likely to roll another five. However, the human mind would suggest that you are unlikely to roll another five. In a nutshell. The
Okay.
key phrase there is in a random data set. I've had discussions with traders, and it's a common thing, the gambler's fallacy in trading, the gambler's fallacy in trading, blah, blah, blah. But here's the thing. In a random data set, I'd be willing to bet that at least 3/4 of the people listening right now believe the market is anything but random. And if that's true or untrue, how would we be able to predict a market close with 76% accuracy, which, by the way, is unadjusted? That's an unadjusted accuracy. What the hell does that mean? Well, for example, 2 days ago, USD CAD and called bullish. By our strict quality rules, that's incorrect. It's wrong. However, and did give a over 40 pip move to the upside in USD CAD. That accuracy is actually way better. Now, how does that relate to gambler's fallacy? Well, we have metrics on AN that suggest that if AN gives a negative result X number of times in a row, you are 0.1% likely to get the next one wrong, which strongly suggests with circumstantial evidence that IFTA is real, mathematically.
So wait, one more time. Just reiterate that last point to me as if I were a young child, please.
Sure. Yeah. So think about it like this. You're a Euro USD trader and calls bullish and gets it wrong. No big deal. Happens 24% of the time. And calls Euro USD bullish again and it's bearish. You are now, and I don't have those numbers right in front of me. I'm actually at the doctor's office of all places. But you are now, that probability goes from 76% to like over 90.
Oh. So it's got to average itself out to stay mathematically.
Which suggests
correct.
the market is not random.
Wow. So behind the scenes, there's classification models, there's clustering models, there's time series models, all being pushed together into a machine learning environment, and you're able to spit out some very highly accurate predictive analysis.
That's right.
That's phenomenal.
Hey, Mark, do you think it's time to go ahead and release that document that we're talking about?
Absolutely.
Oh,
Okay.
really?
People dive into that.
I think we might do that. All right, Kit, we're going to be releasing something. We're going to at you, and we're going to at Trader Roundup.
Okay.
And it'll kind of give a little bit more insight into what Mark is talking about.
Okay. Yeah, I'll retweet this out to the folks listening. Just jump on my Twitter page or retweet what I spit out from Synapse and share the info.
All right, sent, mate.
Guys, so what I see a big problem when I'm working with traders, and relating to what was said about the gambler's fallacy, it is true. Traders are they have this recency bias, and we all know that your trading yesterday shouldn't be taken into account for today. However, it is. We get attached as human beings. We get emotionally attached to yesterday's events, whether we got the trade correct, whether we got the bias wrong, whether we made money or lost money. There's a whole complex. There's a lot of complex factors that are taken into account for how you feel today, what mood you're in, and so the best solution for this, I find, and it'll be great to hear your thoughts, is having a particular process of daily habits that allow you to be in peak performance. So that would allow you, or allow the trader, to be able to repeat the same strategy over and over again, looking for the same model over and over again, because that deviation from that model is where you end up getting random results. So I'm referring to discretional trading. So how do you guys think? What kind of solutions do you think there are, or creative solutions for discretional traders when it comes to making effective decisions in their trading?
I'm so glad you asked that because I have a beautiful response. One of the craziest things about Ann and the data we've been getting from it is not even necessarily the 76% accuracy, et cetera, as awesome as that is. It's the information between the lines. Let me give you an example. The last couple weeks in a row, which it's been longer than that, but I can personally verify the last couple weeks in a row, Ann has successfully called Euro bullish, GBP USD bearish, and vice versa. Now, I don't need to tell you that that would be particularly difficult to do manually. You'd have to have mastered not only intermarket analysis, but also the draw. And did it in a few seconds. But what does that really tell you? It tells you to keep your targets modest, right? It suggests consolidation. We can also suggest low confidence in our trading. So if Ann is suggesting that the dollar will be consolidating, perhaps you should look at moving to one of the other 25 major crosses, like GBP, JPY, where Ann has close to 80% accuracy. So it's knowing how to read between the lines, and that can be dependent on strategy. Once we get the indices released, if you get data that's suggesting that the markets will consolidate, if you were an options trader, you could sell theta. There's almost an infinite number of strategies, and at the end of the day, pure math can help any of them.
And what is the first step a trader should take to introduce this into their process?
That's a great question. You have to already have an established process. Ann is not a model. Ann is not a system. Ann will not magically take you from unprofitable to profitable. You have to already have some form of process in place. Now, I could sit here and give you, I don't know, a dozen, 2 dozen profitable models, mostly reliant on the ability to quantify the draw on liquidity or some form of bias.
Mm-hmm.
But if you were going to integrate Ann into your model, I would suggest first understanding the metrics. What is this? What are these numbers saying to me? And second, what is my strategy and how can that help me? So it's not ever going to be as simple as, oh, Ann said, Aussie dollar's bullish, I better buy. Like, that's a quick way to get wrecked in the market. But if you were already planning and had bullish sentiment on Aussie dollar, and I apologize, I got to pause myself.
Just might have to pause himself. Well,
essentially, we don't want to go
perfect
into the
time. Hold
market.
up. Quick interlude,
What's that,
everybody. Trader Roundup. We're talking with Synapses Capital, Ryan, an alpha leader, founder of this AI predictive analytic company that's dealing, at least for now, mostly in Forex pairs. There's some major Forex pairs, correct? Just a quick follow-up question to that, Sean. What exactly are we dealing with right now in the way of analytics?
Sure. I mean, essentially, we don't want to get into the market completely blind, is what Mark's saying. We got to have experience there. Okay. Like if we got a signal, should we say, with a confidence rating of say 75%, 80%, even 90%, what we're essentially saying is, how can we appreciate on that move? Now, again, to quote sort of ICT terminology, what we're looking at is a range, and that if we pull back inside that range into a discount, okay, with a bullish stance on the market, this would be the best position for us to buy. And again, there's many strategies out there that we can use. But again, that's what we want, that surface. If we understand the market, if we understand what we're doing, and can really give us that push that we need. So that's essentially it in my eyes.
So it sounds to me what you're saying then is like to me this sounds like if you're already an established trader,
yeah,
and you're looking to add confluence as a trader with a model, with your own kind of framework, right? And I mean, I just want to add like guys like Kish and his ONS model is a framework, is a model.
Sure.
And be, learning these things, right? ICT's Silver Bullet is a model, right?
Indeed.
So,
and I couldn't agree more with you, Kit. I mean, Kish is an amazing trader himself. He's got an amazing group, an amazing set of people. But with any trading strategy out there, you can't just say buy and sell respectively. We got to have understanding what we're doing. When you hit the charts from a daily time frame or from a higher time frame, we're essentially saying again from the ICT side of the fence, where are we now? Where did we come from? And where are we going to? From this, we can derive a lot. Then we scale down on our lower time frames, look at ranges and premium and discount respectively, bring in and then it becomes, I don't want to say quote unquote, but certainly a supportive trading system, and certainly increasing your profitability no end. But again, I must say that profitability, and can't guarantee profitability. It can only support what you've already got. And the numbers that we're producing so far, I mean, they currently speak for themselves.
So predictive analytics for the advanced, established trader, someone that's really on their way with their journey. That's what I'm hearing.
Yeah, no, indeed. If you said to me categorically, is this for the complete newbie? I would say no, because at the end of the day, you're going to get wrecked. There's no ifs or buts about it, because at the end of the day, the newbie is, I want to buy, I want to sell. My mate from the pub told me to do this. That's not what it's about. Okay. For me, clearly, you got to have some sort of education behind you. Okay. Whether it be your self kit, whether it be TCM, whether it be ICT and such like programs. It's important that you get yourself trained. You have an understanding in the market, and then Anne can certainly support that fact of being bullish.
I got a question for you, Sean.
Sure.
So could you talk me through a typical day for an ideal trader using your tools? Like what would that pre-market setup look like? What kind of tools are in front of the trader, and how are they approaching the market during this pre-trade process? And then how are they managing that trade? Could you sort of paint a picture of what that looks like?
Okay. So forgive me again if I use ICT sort of terminology. Again, I'm back from 2018 and it's kind of all I know. I've not really been retail or anything. So forgive me if we don't understand certain quotes or sayings that I use. And again, please go to ICT's YouTube to find out exactly what's going on. But essentially, if I was to look at it from a higher time frame respect, I would say to myself, okay, what is the market currently doing right now? Okay, then I'd say to myself, where do we come from and where are we going to? Okay, so if I was to paint a picture, I've got a bullish order block there. Okay, downwards candle, upwards move, and we have just cracked the high of that. Therefore, we validated that bullish order block. So I know where we're coming from. So for me, the next stance on that would be we want to return back to equilibrium of the bullish order block. For me, that's all I need. I can now go down to a lower time frame and I can appreciate within the range that's created, look for a market structure break, supporting and factors that we're overall bullish, and therefore appreciate that to liquidity targets respectively. Now, again, I'm not talking we're bullish on the day. Okay, and we're going to say, oh, we're going to hold for 20, 40, 100, 200 points. No. What we're saying is that clearly we identify our liquidity targets beforehand and say we had a range of, say, 60 points. For me, how I like to do that is I play the ranges within the ranges within the ranges. So that's essentially the fractal nature of the market. And again, I want the highest reward trade possible. So if my movement is 60, I'll take 20, 30 off the table. I'll bank that with a 50% off, and then I'll let the rest run to the liquidity target. Did you get that, Rodrigo?
Yeah.
No, that was
Sorry, mate. Passion got hold of me there, so I've kind of run away with it.
that was amazing.
So my apologies, but again, Mark, are you back, mate?
Yes, yeah.
Superb.
Sorry about that.
I was just giving the guys an overview, supporting factors of Anne. Not that the newbie trader, could just get in this and it's a panacea, buy or sell. We've got to have some understanding about what we're doing and how we would break down the market and so on.
That's right. That's right. Anne's a mathematical edge. It's exactly what Anne is. Anne is a situational mathematical edge. If you are and we, by the way, we have not released our indices model. And I hope I'm not in trouble with the rest of the guys, but we're very close, and we're very close with Bitcoin as well.
Ooh, I'm excited.
There's a lot of people excited.
Well, mate, did you say
about
Bitcoin, Mark?
I did. Yeah.
I thought we was going to keep that under wraps, mate. Look at you.
Sorry, Sean. I'm frazzled, man. I got to apologize to everyone.
The cat is out the bag now. I mean, wow. Okay.
No pressure, guys. No pressure.
Amazing. Look, imagine this. He said it now. Crypto. We apply the same because obviously markets are fractal, and you can trade one asset, you can trade them all. Okay, so obviously when we talk about BTC and altcoins respectively, we've got to make sure that we have a large enough stock because they like to wick around, should we say? But again, if we apply the same logic across the board, imagine what you could do in BTC right now. And I don't mean right now just in its intraday charts, but imagine the long plays. So it's kind of all to play for, really. And again, as Mark touched on earlier, when we start looking at intraday stuff, imagine. Let me paint the picture here. Imagine we said we was looking at intraday. So we said we got a daily bias of bullish, we got an hourly bias of bullish, we got a 15-minute as bearish. So what's the 15 minutes doing? It's pulling back inside the range. Beautiful. Now the bullish, now the 15 minutes starts turning up bullish. So that means we got the daily, we got the hourly, and now we got the 15-minute bullish. We wait for a shift in market structure. Away we go. What more do we need, guys? And imagine that green, green, green. And did I say that we're possibly developing a trading view indicator? Oops, sorry.
A what? A trading what?
Did I say a trading view indicator? Oh, sorry. We're giving it all away today, guys.
Oh, I love that. I mean, I'm on TradingView all the time. I love that. Wow.
Everyone loves a Telegram and with stats and facts and figures and so on and so forth. But I can imagine some people saying, well, how can I use that? How can I get a competitive edge? I mean, it's a given on the competitive edge, but for those people that just don't understand, imagine what you could do with a trading view indicator that said up or down.
Yeah.
With a % confidence probability.
Indeed.
That's impressive.
Something like that. Yeah, something like that from a psychological perspective, it adds conviction and it adds detachment, because whatever the outcome of that trade is, you just detach yourself. I mean, it's a statistical model, right? Why would you emotionally attach to it and judge yourself because the indicator said bullish, you took a bullish trade, you took a long, and it lost. So the fact that you followed your system, that's what counts. That's what counts.
And I couldn't agree more. This market is about, we don't say to ourselves, well, what we're going to do is we're going to take a short there today because it looks good. We don't do that. We have a rule, and credit to Kish and people like that, a rules-based method. If this, then that. You cannot get away from that right now.
No. And I mean, kudos. We got Hitman, we got Aber, we got Kish. I mean, we got some monster traders in here right now. We got my favorite 14-year-old AMD in the house. No Sheen, Jonathan, Angelo, Parker. I mean, I saw a back test Jess earlier. I know, and she's repping liquidity. Right. I love to see it. So who else we got? Just seeing if I recognize. Scrolling through. If you guys got any questions, speaker tags are going to be open. We're going to do that quickly. The market is open. I already turtle souped. It's ironic how that works.
I was thinking, Kit, we can send some invite links to the restream.
I think I could. I mean, yes, we could do that. I think I could just put them on the speaker here, and it would. I think we're in a pretty good vibe right now.
Yeah, it won't. Tell me who you want, and I'll send them a private link.
I don't know how to do that. Let me just see if there's anyone here. There's backtest Jess. I was wondering where she went.
Okay, I'll send her a link.
Yeah, let me just see if there's a way to go on the speaker. AMD, my favorite 14-year-old. What are your thoughts on all of this AI, on this predictive analysis? I want to hear it from you, my friend.
All right. I don't know how I feel with it, to be honest, because like I don't know a ton about it. So.
Well, that's fair. That's fair.
Like I would want to give it like I just want like before I ever use it, I want to see how it works and like how other people are using it.
I think that's a really good approach to kind of see, a wait and see kind of thing, and kind of see how it hits the market and how people are doing with it, and kind of watching and following it closely. I think that's a fair approach.
Oh, and also, not 14 anymore.
Oh, word! You're 15. You're the same age as my daughter, brother. You're the same age as Sienna.
Excuse me. Did I just hear that someone's 15 in trading? Oh my goodness.
Yeah.
That's amazing. Absolutely amazing. I wish I was in your position back then. Wow.
Yeah, he's our favorite 15-year-old. I can tell you that. And he's got a YouTube page, and it's amazing. And he does back testing. And yeah, I'm trying to get my daughter to do the same things that AMD's doing. So, but all of us dads, we all know you can't push too hard, because then they're just gonna tell you, fuck off.
Hi guys. I'm sorry. Go ahead.
What's up, Angelo?
Nothing much. I just wanna throw something there. So many experts in the room, so I feel like shy to ask this question.
No, feel free to ask, buddy. We love your questions. I love your analysis, and I'm happy you're here. So thank you for contributing to Trader Roundup today. Pretty please jump in.
Thank you very much. I'm very good at thinking, but I'm not very good at trading yet. So that's my honest.
You are, bro. Don't give yourself more credit. That can't be the way you introduce yourself. You have an excellent analytical mind, and I believe in your analysis. So please continue.
All right, thank you. I just want to ask to the beautiful folks that you have here, expert and stuff. What is we are at a turning point. We see these days NQ taking the August 2022 high after the Dow Jones that was this like a few weeks ago. The Dow Jones took the high on the February of this year. Then was the turn of the Nasdaq yesterday, and now is the turn of the ES. Today is the Fed chair speaking, Powell, and Dixie is at the crucial level. We are in a very crucial situation. What do you guys give an outlook of the market, please? I wanted to hear your opinion. I don't want to listen just, speculation or, a future, whatever. Talk about the market, please, guys. Everything is yours now. Bye.
Oh, well, Angelo, if you're gonna just throw me against the wall like that, buddy, I'll happily jump in. I'll give you 42.30 is an interesting number. 4240 is an interesting number. I want to see us from a higher time frame. I want to see where and how price is reacting to the monthly wick of August. So I personally like to measure that range, and I measure that range with a quarterly fib that also has a power of 3. So
I know your opinion, Keith, already.
Okay, you don't want to hear my opinion then. Damn it! I just wanted to throw some alpha in there. I'm not afraid of jumping in. You know that. So anyway, you know my opinion. I think we go up to go down.
Yeah. Why, guys, do you think, Dixie is going up with the market? This is crazy. It should go down. I don't understand this.
So, Angelo, I just wanted to say I read an article yesterday, right? It says that they pump in mysteriously when I started seeing the dollar pump, right? And I'm gonna go into crypto. I don't know how you feel about it. I am a strong supporter of crypto.
We love crypto, buddy.
Okay, so yesterday I saw an article says USDC to come and save the dollar by pumping $83 billion of USDC coin into the dollar in order to save it. That happened yesterday, the day before yesterday, and the article was posted yesterday. And now all of a sudden the dollar's pumping. I've been asking in numerous amount of the groups the same thing. Why is this dollar pumping? I don't understand. The only other reason I can say is the Fed going to announce today that they're going to fucking print more money and just kill and just continue to murder us? That's where I stand on it. I believe that $83 billion that's coming in from the USDC coin is definitely going to help us in a huge way. And this is why I see the dollar pumping. But I could be wrong again. This is just my bias from reading articles.
So crypto, your bias is, and I know you're a news guy, so I want to hear it. Your bias today is what? What do you see? You see the Fed pumping?
So I see. If they announce exactly what this article is saying, and Angelo, I'll look for the article later. Maybe you can read it, and with your knowledge, since you guys are older than me, can maybe understand something that I didn't understand. And the only thing that I understand, since I'm a crypto guy, is crypto's here to save the day. That's what I'm saying. That's what I'm looking at. And it might sound ignorant, but this is just how I feel. So I offer reading that article. I'll look for the article when I get home, and I'll send it to you guys so you guys can read it if you choose to. But I honestly believe that none of us are stupid and none of us are blind, right? Like, we can all look outside the window and see that the economy's straight crap. No matter how you look at it, no matter where you look at it, from the employment standpoint, from the purchasing food, from the shortages. I currently work in Atlanta, Georgia, and I work for the school system, who is struggling right now to keep food on the table for these kids. My company is in Atlanta, Georgia, and we're bringing fucking milk up from Tampa, Florida, in order to provide milk to the students. So obviously there's something going on everywhere, right? You got schools scrambling; they don't have enough food to keep the food on the table for kids, which means that we're really facing a shortage of food. This has never happened before. I've been working in the school system for 15 years. I've never seen this happen. Nor with milk, nor with food. Kids were always a priority. So once you're telling me that kids are having a problem to get food, or that kids are coming to school and asking for extra lunch, you got schools that are packing lunch kits to take it home. We're having a serious issue in the economy. So there's nothing that you can tell me that people can say, oh no, that's not really happening. I don't care how rich you are, how poor you are. I assume everybody's feeling the same pinch of what's happening in the economy. What can he possibly say to make people happy? You're going to print more money? If you're smart, you know that that's not the answer. And then if he says, oh, well, we're just going to start burning money and inflation's going to go up, rates are going to go up, that's not going to help anybody either. So no matter how I look at it like all the news is negative. Even the shit that he's going to say that's positive to try to calm down Americans or the world, right? Because there's still a lot of countries that depend on the American dollar. Even though we got this whole BRIC system coming up and all these people designing their own coins,
I don't know if you guys read, but Ripple opened their block. Guys, sorry. No, I don't want to stop you, but I like the crypto as idea, but till the internet infrastructure will be owned by governments, we're never gonna be free. So I never believe that crypto is gonna be the solution. I believe that on this matter, I'm 100% with Michael. We are going through always hardest and toughest time, and it's gonna get worse. So I think we're gonna get to a certain point that we cannot manage it if they don't want. Who controls the system? I wanted to ask you something, right? To those people that say DeFi, the decentralized finance, whatever, is the future, is the freedom, is the power. How can it be the power and the future and the freedom if the infrastructure is under control? We know that markets are under control, right? We know. So we know also that internet is under control. So any internet is a military infrastructure. In each country is owned by the government, by from the CIA, secret agent, whatever. So because all the data goes on the internet, so no country will allow a foreign country to control their own infrastructure. Look at China, look at Russia, look at United States. So United States friend country, they have the same infrastructure, but the United States enemies, they don't have the same infrastructure. So how can you think in the future is going to be, a crypto system that is free or is, give you the power to be independent by the central bank? This is illusion. This is illusion, my friend. It can never. Angelo, I don't mean to cut you off, but I don't. Okay, so this is my personal point of view of it. Is just that I don't believe that crypto is the answer to everything, and the reason why I say that is because everybody tells me, "Oh, this is decentralized and this is centralized," and then I ask them one question: "How the fuck did you buy the crypto?" "Oh, I used my debit card or I used my bank account." Okay, so they know you own the crypto because you used your money. That's a bank account that's linked to them. Go get yourself arrested and they'll be able to find out every transaction you've ever made through crypto or through anything. So there is no decentralized and no centralized to it. I just believe that they're going to try to burn the American dollar and crypto is going to be like a new type of currency. But look, American dollar is burned already. The U.S. economy is the most, debt economy in the world. The debt ceiling, you guys need to increase the debt ceiling now, right? On the 1st of June. So the United States does not produce any good anymore. The most production is China, India. Those are the manufacturers of the world.
So Angelo, you're saying that you're buying the news and dollar goes down. That's what you're saying. Dollar goes down, indices go up, and we see new highs. Yeah.
That's what I think because I can't believe dollar is going up with the indexes, or it's gonna be the opposite. If the dollar is going up, then we see the fall of the index. So otherwise, there is no correlation anymore.
Okay, hey guys, I love this conversation. I do, and this is Trader Roundup, which means we talk about this stuff all the time. But this is a very special episode today, and we have some folks here. And let's respect their time and their presence and energy for being here. And yes, we do get sidetracked, and it's hard not to. We are with our fingers on the pulse of the markets. So, Angelo, crypto, thank you so much. But let's keep the conversation on AI, modeling, predictive analysis. Okay, feel free, jump in.
I got we definitely got sidetracked.
Yeah, I got the ADD more than anybody. So we got questions for Synapses Capital. Let's keep it directed to these gentlemen who are here. Pretty please.
Okay, questions. I've used these I've used AI bots before, right? Only to always end up with the same exact result. They win 3-4 days in a row. You think you're making money, then on the 5th day they pull your account.
Well, that's not what this is, though, right, bro? I mean,
Sorry, I'd like to say something back on that.
come on, hey, hold up, Crypto. Let Sean speak, please.
No, I was just merely saying. You said 3 or 4 days, and the 5th day they blow your account. Personally, I wouldn't be looking at the strategy per se. I'd be looking at your money management overall. Because you say that it blows your account on the 4th day. Why did you let it get to that point? You've got too much risk exposure in the market.
I appreciate that. I bought a few of them before, like when I first started trading, and I didn't really know about risk. It was just plug and play, and then I was just like, how do these things really work? They say put $200 in there, blah blah blah, and then everything is just done AI, and they show you all these probabilities and all this other stuff. So
that's not what this is, though. I mean, it's a little different. I think it's different.
Hey, Crypto, if I'm not mistaken, are you saying that? Yeah, Crypto. Oh, okay. All good. So, by the way, sorry, I actually went out, so I lost everything on the computer. I tried joining via YouTube.
That's okay, buddy. You're here. We can hear you. It's all good. It's all good.
Absolutely. By the way, just I love the passion over crypto. I mean, we're definitely excited about it. I actually posted a tweet the other day saying that we definitely have it in the oven. The boys were, revealing some things about it, and I actually said this, but I don't think my communication was being received due to technology issues. But I will say this, that crypto accuracy for N is looking amazing. And I'll go so far to say that it very well might be over 70% accurate. And we think that we can get it much, much higher than that. But I'll leave it at that, okay?
Nice. So, quick question back to AI. I want to bring it back to AI. And did I hear or see a tweet where there was a potential other name? What is this nonsense?
Yes. Okay. So
I'm kidding, by the way.
No, absolutely.
I like the name Anne. I'm very affectionate towards that name, by the way.
Same here. It's a very meaningful name for us. And now, as for the other name, what we are looking at doing, right, is naming other models that we create and then release to the public. So one of them that I brought up, right, was the intraday bias model. So obviously, once we create that, we're going to find a name for it. Probably not going to be Idan or Aiden, however they say it. My apologies to my friends from Africa, but we will name it something, and then we will release it to the public for everybody to use.
Nice. That's cool. Can I vote for Anne?
So like an Anne 2.0?
Yeah, that's I like that. Anne 2.0.
Maybe. Well, actually, I can't do that, right? Because so this is one of the beauty of our products, right? Is that most people, when they buy these products, or they want to be called AI, that we don't think that they're legitimately AI. People usually think that, okay, I bought this thing, then it is what it is. But one thing that people don't know about us at Synapses Capital is that we are constantly working in the background to improve things. Every time we have a trading day, we're reviewing numbers. We're trying to analyze where can we improve things, what can we add, what went wrong. So this is going to be a never-ending process for what we deliver. So there's constantly going to be new launches. So for example, originally our release time for these daily bias sentiment was at 9 o'clock New York time. Then we broke it down to 8:30 a.m. New York time. And now we've brought it all the way back up to not 7:07 because I use Chicago time, but 8:07 New York time. And eventually, our goal, because it's always good to have vision, is that we can get that before London opens so that our London traders can trade that as well.
I love that. That's awesome.
Okay, I've got a serious question.
Yeah, I know Flowing Key has one too. NZT, I'd like you guys to keep questions directed towards Ryan, Synapses Capital. We're talking about AI. Please continue. Jump in, Billy.
I've got a serious one that's sort of been bugging me. I mean, can you sell it to me? Because what this seems to be trying to achieve is take my job away from me and the part of the job that I enjoy the most. I understand that you'll have new traders that are not into calling where the market goes, where it should terminate, etc., etc. But it's the fun part of my job. So explain how I will benefit from Anne.
No, absolutely. I think it's a great question, mate. So when you say that taking your job away, are you saying that you might be thinking that you might not be able to trade? Is that what it is?
No, nothing like that. It's my job to sit down, analyse, look at the market, look at the charts, work out what's going to happen, when it should happen, and why.
Okay.
And I do this, and I'm presuming we have the same amount of accuracy as any sort of experienced trader. But what I'm getting at is, if that's taken away from me, then I'm not going to enjoy the rest of it. I might just be old school. I might be like a techno nerd, technophobe, or whatever you call it. But that's kind of the job that I enjoy doing. And I don't understand where it fits in for me, if that makes sense.
Yeah, no, absolutely, mate. I think that totally. I think everything you said is reasonable. I mean, like for me, I love trading. Sean, he kind of finds it boring sometimes, and I totally get it. But the biggest thing that we want to emphasize is that Anne, in and of itself, is not a strategy. It's not a strategy. It's not a one and done type thing. What she's supposed to be is a complement to your strategy. So everything that you do on a daily basis is something that you can still do day in and day out, and then supposed to complement it. So that's why we've always pushed on Twitter that she's an assistant, that she's here to help you. Like I would go as far as saying, I wouldn't want to, lower her value and say she's like a cherry on top. But I want to emphasize the fact that, you don't always need a cherry on top on a cake. Although that will say that Anne's very powerful, right? But it's that bit that gives you the edge in the market, right? Because that's something that we're always seeking. That's something that Kid talks about all the time. Is that we need an edge. We need an edge. And so, yes, you are a profitable trader. But do you want to be the best trader? Do you want the edge to take you to the next level? We believe that our product will do that. And it won't take anything away from you. If anything, I think it'll make it more fun.
So it's going to back up my outlook and give me like a mathematical percentage of how correct I am.
Absolutely, mate. If anything, I'm assuming, being who you are, that you like to collect data, right?
Yeah.
Yeah, so if anything, this can definitely complement, right? So I was actually talking to one of our beta testers, and I was asking him, hey, how are things going? How's she treating you? And he's telling me, he's like, dude, he's loving it. And I said, would you mind walking me through your process? And he says, well, I get up, I look at market structure, I look at the time, because time is important, right? As we all know in this space. Then he starts looking at the news, and then he goes and look at Anne, and he sees if it's confirming what he's believing, because you don't want to let Anne determine what you are saying. You want to get that extra edge on top of what you're doing. And like Mark stressed before, like if you're coming in, not you, but people are coming in thinking that, Anne says bullish for today, I'm buying. No, we don't do that at all. We have to have analysis, and if you don't have analysis in there, if you don't have your own strategies in there, you using Anne will never reach the potential that she was designed to help you reach.
Can I just add, Ryan? I think it's really important that traders understand that predictive modeling is going to add confluence to them and themselves, right? So I think I'm hearing you say, Ryan, that a trader within their model, when they can add more of a data-driven predictive analytics, right? That's utilizing machine learning, that's got linear regression, that's dealing with some neural network free form of data over a series of years, right? Within a specific instrument, right? So there's these kind of extensions and regressions and kind of pulses and a vibration to that market, right? And that can become taught within a machine learning environment. That's the world that we're in with data science today, right? Would you agree?
So it's going to become another fib for me rather than just a crappy trading bot sort of thing. That's my understanding.
Well, I would go as far to say that Anne is much more sophisticated than a fib.
Yeah. Well, no, but a fib is a core tenet for a trader. It's fib is actually a very high compliment, Ryan, because we don't trade without fibs. A lot of us don't. So.
Okay. Can I maybe personally or anything? It's just like I just want to make sure it's communicated well. But yeah, everything you said is great, Kit. I mean, I feel like you're doing a great job at selling the product for us. Something I also wanted to add when you were talking, and this one definitely goes to what Rod was saying, is that I mean, I think something that has helped me personally, and I know that a lot of traders trade with stats, is that the statistics can really guide your mind. And I think guarding your mind when you trade is probably one of the most important things because it gives you clarity. And so, for example, I keep tabs of how many losing days on average I might have, right? So let's say I have 2 losing streaks in a row, two losing days in a row, but I know that my average is at most I'll have 2 losing days, and then after that I usually start winning again. I mean, being able to have that context to see what's going on will give you the peace of mind. Whereas someone who has kind of short vision, they might be thinking, oh, I'm losing, I've lost twice in a row now, I don't know if I can do this, I don't know if I'm going to make it. But if you have a statistical advantage, you can think, it's okay, all right, I've lost 2 days in a row. Looking at my performance over history of time, there's a very high probability I'm going to do well tomorrow, so I need to make sure I survive. And so when you look at the stats that Anne does, that's what she helps you. That's actually what she provides with certain assets. Is that that when you trade, you have a 76% probability of being correct. I mean, the implication that has on psychological well-being during trading. I mean, Rod could probably say, like really pan out for me, but to me, it's profound.
I couldn't agree more. Adding a go ahead.
Thank you. Nice to meet you, Ryan. Beautiful thing you are building. I just want to maybe help to Billy to understand, because I maybe hear he's a grown man. So I'm building a AI2 with a partner. I'm the trader. He's the technician. So he put the example of a fib. Okay, when you are tracing a fib, you are trading with the mathematical probabilistic of the the classic 0.68. So that number will be probabilistically good to go into your position. What they are building is an enormous complexity about mathematical different approach into mathematical and something called neural links, something like that, and they are predicting possibilities that give you the bias. So you as an analyzer, you have your own bias, and in this case, this artificial intelligence that give you is a confluence in one of the most important things in your day. Are we bullish or are we bearish? So you have to see this like imagine you trade with fundamentals, and you open the journal and you see how is the world. It's the same thing. It's just an addition to your perspective. So maybe that helped to clarify the dude.
Yeah, man. Yeah. I understand it totally. It's going to become another tool. I refer to things that I use as a tool in my toolbox. I'll go and do what I do, grab a tool, double check things, and then off we go.
It's amazing, mate. So, first off, Angela, I just want to thank you for clarifying that. So, Billy, now the reason why I said that, I think the N is more sophisticated than a fib, is it's not so much that it's a tool versus tool. It's more so the amount of statistics, the mathematical metrics that are backing what N can do. Is, I mean, we haven't seen it in the retail space. It might be out there. I'm sure it's out there, but we haven't seen it quite like this. And again, that fibs are great. I used to trade with fibs. I think they're awesome. But a lot of traders kind of tell me, yes, I have 12 years of data of back testing fibs across 30 plus forex pairs. And by the way, we're increasing the amount of forex pairs as well as the amount of years we're looking at. But the point is that most people kind of tell me, how long they've back tested something that would actually be greater than what Anne has done. So that's the reason why I emphasize that. Yes, she's a tool, but I think that she might be the shiniest tool in the toolbox because of the metrics.
Yeah, no, I get it. I fully answered my question now, because I was listening and thinking, okay, this is just going to be another trading bot type thing. But now I realise it's going to be an AI-powered tool that may well be my shiniest tool in the toolbox. Now I kind of understanding it, because if it was just something that predicted it's going to go up or down, that's my job. That's what I do every single day. I didn't want something having to use something else to rely on, if that makes sense.
That makes total sense to me.
And Billy, you're Londoner yourself, mate, are you?
Yeah, Essex, mate, yeah.
Yeah, no. I'm not from down south. So look, as traders, I'm predominantly an industry trader, okay? But what Anne can do for me personally is I'll just take a browse of it and say to her, okay, what's the highest probability? I've got 3 asset classes that are high probability. I do my initial analysis based on what it's told me. It's, I don't want to say it's a panacea, because please don't think that, guys, but it's amazing what you can do with the power of AI. Now think about it like this. You'd say, for instance, you predominantly trade one asset class, and that is really all you need if you're really good at what you do. And I don't mean that personally, but it really is if you scale the time frames. But say you wanted to trade multiple asset classes, you can only do so much analysis in one day. What this does for you, in a sense, it will cherry pick the best assets, and you can go, okay, I'll take those 3 because they're showing 70, 80, 90%, and you can go, now I'm going to go and do my analysis on it, and it's like a silver bullet. I don't want to say it, but you know what I'm saying, Billy.
Yeah, totally agree. Yeah, I understand.
Actually, if I add to that as well, and this is something that the team's considering too, right? Is that not only, as some of you have seen, are we giving you a bias based off of statistical percentage, of stats, right? But we're also able to give you percentages on how accurate that prediction is going to be. So it's basically a prediction of a prediction. And so I bring that up because something that we've talked in the team is, do we want to only release the highest of highest probabilities, or do we want to release a high enough probability that gives a huge edge anyways, so that people can then move forward with it? And actually, the thing that we posted on Twitter shows that, as you guys will see, you'll see 65, 70, and so on. And that's going to be the accuracy percentage of the percentages within each of the rows and columns.
So again, this is predictive analytics that you're adding to whatever you're already doing anyway. You're then just coming in and utilizing it. I mean, I find it fascinating because I do spend a lot of time and energy, and I feel like with what ICT has done with these time-based models and what took me so long to figure out as a grown-ass man in these streets as a trader, without all of this information being democratized and given as freely as it is, that's not the world I come from. So the validation of these time-based models, for me, hearing it come from ICT in his lecture, and having had developed a lot of these things kind of in secret, or having had to struggle through a lot of research and back testing and forward testing and speculation, right? Having it come directly from ICT, having these time-based models, knowing that you're gonna go to the 6 o'clock price, you're gonna go to the 4 o'clock price, you're gonna do it at certain times within the day. I think that's fascinating. Utilizing a predictive analytics tool, it can't hurt the team. It can't. So indexes are coming. That's what I heard.
You know what will be amazing?
What's that?
I had a vision of having an AI or a machine learning tool that will tell me, Rod, don't trade today. You haven't slept well. Go on, buddy. Close the laptop. Go walk in the park. Go for a walk. Or a predictive model or some sort of tool that tells me, right, You've won the last 3 trades. You said you're feeling a little bit euphoric. Step away. Or another scenario is, you're doing well. You're on your 3rd day of trading this week. You've completed your morning habits. Go for it. You're in the zone. Keep going, buddy. Imagine that.
Ron, I would go as far to say is just like, why can't we make that? And I think we can. And I think that's something we will deliver. That's actually, to answer more your question that you asked me earlier, Kit, our vision is to be able to develop so retail traders can use. I mean, I love what you're doing, Ron. I really do. And I think what you brought up is exceptional. And that's something we are moving towards. So, yeah, why not?
Well, let's have that conversation.
Yeah. In time. Next combo. I think we can build and develop on this, and I know Rod is really, really passionate about helping traders within understanding their own feelings and the psychology within the mechanics of a trade.
And the beauty, right, behind the tool that we're using, and this is something that we've brainstormed, is like, what if we did create a database where we can collect all of these statistics on performance and everything, and instead of us having to sift through and make sense of it, we can actually have a program, catalyze that for us and help us be more precise with how we make sense of it. Because we think, again, these things might sound so nuanced or like, oh, it's just a little bit, but that's what makes a difference between the great and the good. And we want to be good traders. We want to make a lot of money.
Yeah, well, I kind of want something to replace me, because I have database. I have a lot of data on traders, emotions, behaviors, tendencies, and I have a database of this, and so it's my job. I spend hours and hours going through this data, filtering out, looking for the insights, and I do this manually, right? And then I feed it back to the trader, and we create a process together that's tailored. And this is part of what I do in my coaching, but having a tool to help me do that, I'll be able to reach more traders. In fact, I'll be, it'll replace me. How amazing would that be?
Well, I mean, I think I'm more on Billy's side, where I'm not really keen on being replaced because I love my job.
I know. I don't want to be replaced, but it'd be great to have a tool.
So, Trader Roundup, AI, technology, and trading. We're even talking about some of the AI, technology, and trading within ourselves, within tracking and mapping potential feelings within your day. That's fascinating discussion. Great minds here to talk about that. Oh, boy. Would love to hear from my friend, the master. Daredevil, fascinating conversation. We're going a little bit longer than we had thought. We got Funded Fridays coming at 11 o'clock, so we got probably a hard stop in the next 15, 20 minutes. I don't want to roll directly into Kyle's time, but fascinating discussion. AI, technology, and trading with Synapses Capital. The master is here, which I haven't talked to you for a while, bro. How's it going? How are you doing today, this Friday?
Hey, what's up?
Not much, brother. Not much. Nice to hear from you.
Yeah, well, I'm super busy.
I know you are, brother. I know.
So I was just chilling and working almost 7 days. So that's why I didn't have time to jump into your call.
That's okay. That's okay.
I just came and I wanted to listen, and you always spot me whenever.
I know, but here's the thing. We're talking about AI. We're talking about technology. We're talking about trading. We're talking about predictive analytics. We're looking at data and data sets. And I think it's pretty obvious and it's very clear and apparent that we as a trading community can say that 6 months ago, you were bringing data to the community as a pioneer with retail, with your high probabilistic matrix and framework, as well as data. So I think you're a great person to talk to. Where do you see it going? Where do you see AI fitting into these predictive analytics and data sets?
Well, like I can tell you from a professional standpoint, we are still in the kids' shoes there. So I don't expect anything to be changing the industry for at least the next 10 years.
Okay.
But the point is, I mean, like, I wouldn't say AI, but like I think machine learning is a very big aspect. If you have like good data sets, then it can give you good probabilities for trading decisions. AI itself, I'm really not sure. Like, I'm not a big fan of it because at the end of the day, every AI is based on what you feed into the data, or like what data you feed into, and then what is the decision tree, and like there is a lot of things trying to get to a point where they say it works, but like in the professional industry, it's still something which is like not really used that much. But I'm pretty sure that will change over the years. But right now, I mean, like the biggest point I see right now and where the trend is going in the industry is definitely into machine learning. So, for example, like even at the time when I was still working there, we already worked with social media and feeding all comments and all analysts' opinions into a machine learning system, which then can give you an idea of how the market sentiment is. Like in sentiment, for example, AI is used quite often now. So that's very good use case. But really, like if you talk about the algos, AI still has a far way to go.
Sorry, can I just one thing there? It will be absolutely amazing if you, in your development, you into the sentiment have something like a great journal, like the AI catching everything about the internet and giving you like a filter about, I don't know, the market you are trading, whatever. That will be really great.
Yeah, that's possible. That's possible. The question is just, like what we have done, for example, which is also a very good use case where you can use the technology, right? Is like every professional investor and every professional hedge fund, pension funds, they all have their investment rules, right? You can get them easily. Like if you write a hedge fund and they say you want to get an investor, you get their offering papers, and there they have to define their strategy, how they would trade your money if you invest with them, right? So what we did on the professional side is just feeding all this data, also in a machine learning system, which you can use now also with the AI systems, the newer AI systems. And you get a very good understanding and you get a very good heat map at which levels professional investors like hedge funds, tier 1, 2, 3 money managers want to invest, right? That's super useful and was super useful in the industry. So I think there is a lot of things which are coming. Also seasonality, I think, is a good field for AI.
Yeah.
But like in the intraday trading, it's still very complicated because the systems are not capable to really deliver as the professional world would like to see it, because it's a different story. If you're working with a 1 billion data set database, or like if you go intraday, I mean, one day, like when we were still developing the systems, we had like data sets which had like over 10 billion data points a day, right? So you can calculate, if you want to have an extensive database, what power you need behind, right? So, but we will see. So I think it's a good topic. It's definitely interesting. I mean, I am absolutely only data focused.
Yeah.
And as
Yeah.
I was working in the industry, I think that sales is also industry is data focused. Everything professional is data focused. So I think that's a very interesting field for the future.
I mean, we're talking about predictive modeling, right? Like
Yes.
we're really talking about statistical techniques. We're using logistic and linear regression models. We're using neural networks, decision trees.
Yes.
And within this predictive modeling of these massive data sets, we're classifying them. They're falling into specific clusters, and they also have time series, right? So we're slicing and dicing this data into some pretty important parts and pieces, right? So I think the more machine learning grows, I think the more interesting, the data science and, this deep learning becomes. I mean, we have the master here. We have Synapses Capital. Ryan, what are your thoughts on the conversation? Predictive modeling, where we're at, where we're going, these different risk kind of evaluations and bias tools.
So I can only speak for parts of the conversation, but firstly, what we'd like to say is that, we think that what the master done for this space was needed, because a lot of people have been coming in and they boast about their strategies, but what we've always said amongst ourselves is that your strategy is only significant if your statistics are significant. So him coming in, and talking about that, making it the norm is something that we absolutely love. And that also kind of set the tone for us to be able to step in and say, yeah, we totally agree with that. We absolutely love it.
So then it comes down to just where and how you can define and refine your machine learning internally on top of these big data sets that are starting to be eaten and devoured by technology as it grows.
Yep. Yes, I would definitely say that's the case, and the thing is just like, okay, cool. Everybody can have access to data sets, but it's about how do you process them? What type of inputs are you developing? And that's where we think that what we can provide is where the edge comes in.
Yeah. I mean, predictive modeling, predictive analytics, data pools, trading. That's a topic of conversation today. I think it's fascinating, and I think we have two really smart guys. We have a whole team of amazing folks at this round table, and I want to go back to you, Master. And what are your thoughts on the vision of predictive analytics, on predictive modeling, data sets, how retail traders are gonna trade?
Well, this is not something new. Literally, when we started 2008, right, front running orders, which was possible because we literally saw the difference between delivery of orders on different exchanges in the US, right? That was the beginning of this whole trend, or it's not even a trend anymore. It changed the market completely, right? So predictive modeling is already used in every single algo which is operating in the market, not only from the SLPs or the liquidity providers. It's used by all the big companies from BlackRock to all the other companies which are using not the liquidity providing algos, but the decision making algos. The point what Ryan said, I think Ryan was his name, is absolutely correct, because the point is you can have data, you can have so much data in the financial world, but the question is how you frame, everything, we call it pre-processing. It's if you're having success with data or not, it all depends on your pre-processing of the data, right? Because that's going to make the difference. So your model or like your predictive model is based on the model you're creating, and based on your model you're creating, or you're preparing your data for it, right? So the output or like the results you're generating with your data is only based on your model, right? You can have the best AI system, the best, like you can have great tools in your repertoire, but it all falls with how you model your data and how you pre-process your data. So in example, like DR and the data for DR are working because we are framing it. So the time, what we are taking, 9:30 to 10:30, or the other sessions, right? And the rules we have around this time frame allow us to pre-process our data and then feed them into a machine learning system to generate models for whatever is happening, right? But that's the main key, right? Like to use data and to work with data, you need a model to frame it around, right? Just feeding data into something is not going to generate any meaningful result, if you know what I mean. So, I mean, there's so much like going on in this area. But I can't stress enough that it depends like what you have to have before you can create any data sets or any models or any AI system or even feed something into machine learning is you need to have a model, right? So let's say you could create a fair value gap data set, right? So for that, you would have to frame rules around your fair value gaps, and then you can create your data set around, and then you will get a result out of that, right? And once you have that, then you take part of your data set and you feed it into a machine learning system, and then you see if it's possible to improve the prediction quality. We call it prediction quality, based on the data you feed into, right? So there are so many things going on, from regression, like you said, classification algorithms, decision tree, random forest, linear regression, extreme gradient boosting, feed forward, neural networks. Like there is so much things you can do, but all of these things, and that's what people forget when they think about AI, right? ChatGPT is a great tool, but don't forget, it's literally got data feed in. There was a model built around, and that's why it's working. And nothing else is going to happen in financial industry. So all these tools and all the hype around AI is just working because like some human brain was sitting there and creating the model. And then of course the machine and the data which were fed into those systems, right, is then using the model to create the result. And that's very important to understand. So AI is not some magic stuff, right? Everything from ChatGPT to Midjourney for pictures, it all depends on the model. So the intellectual value of those things is in the model which was created by the developers, right? So, and that nothing will change in financials. So as long you have a bad model, you can feed data till you're 80 and you're not going to get any results. So the framework, how you process your data and how you model your data and then pre-process them, that's the first step before you even can think about supervised learning, right? Predict the next value can be only based on what you tell the computer. The computer will not going to tell you, yeah, market going up today. No, it needs a model and a framework, and then you can see if you can use supervised learning categories or algorithms to come to predict the next value with a higher probability than you would be by eye, right? So, and then the next step when you have that, then you go into the unsupervised learning, or we call it the unsupervised learning, which is to identify clusters, right? And then the next step is reinforcement learning, which like literally then the system learns from its own mistakes. But like all these steps are, you can throw them into the garbage. If your model is bad, all the following steps will be bad, and your AI system will be bad. All machine learning will be bad.
So it's mostly logistic and linear regression models is what we're talking about, right? I mean, that's mostly what we're talking about.
We have two, like if we talk about algorithms, so now it's getting very technical. So we have classification algorithms, right? Which is decision tree, random forest, linear regression, extreme gradient boosting, feed forward neural networks, recurrent neural networks, long-term, short-term memory. That's all called classification algorithms. Well, so they classify. And then we have the regression algorithms, which is a separate part, right? So that's the two most used algorithmic state, let's call it state, or versions, which you use for supervised learning, right? And supervised learning is the first step, right? So you start first, this supervised learning is the first thing you can generate. And then, that's why we call it AI. Once the supervised learning is done, right, then you can go to the next step, which is then we call it the unsupervised learning, which is like literally then the system is learning without my input, right? And then the reinforcement learning, which is the last step, which is like literally the system then learns out of their own mistakes. Simplified.
And that's where you can start cross referencing more, and the like your time. You can be refining your time series and then your range series as well. With
I think that's also in the first stage, like the
yeah, and your classification, no, for sure, right? Like that's part of that is the supervised learning, right? That's what you're defining your X and your Y within those inputs and within those data sets. Those relationships and that historical data is specifically the segmentation parts and pieces that then get clustered and then get refined over the machine learning capabilities.
Yes, yeah, like that's all. But like this is like really like deep understanding in terms of how an algorithm even is developed, right? So there are different. Like you want to have like you always when you take data and you want to create something with them, you're looking for it's called a zero or null hypothesis, right? So if the data is non-stationary, like you do a lot of tests to figure out is there anything, because some data sets they just like they have the variances in between them, right? But they don't give you a meaningful advantage translated, right? So in that case, right, either it's accepting the null hypothesis, so that means that the data is non-stationary, or if the test value is above and rejects the null hypothesis, then it means data is stationary, right? So there's so much things what it can do.
Yeah, and we no, I think we definitely delved into the weeds, probably more so than the average person might be thinking of. And I'm gonna say thank you for that. It's nice to talk about modeling and statistical, techniques used for analytics, and people who know. And we got a lot of folks here in this conversation that know, and I think that's pretty cool. So want to open up the conversation quickly. We are going to end up here. I got Funded Fridays at 11 o'clock with Kyle. I'd love to see you guys head over to the Trader Roundup YouTube page. Give it a like, give it a follow. Listen in with Kyle. It'll be just like this, but he'll have it like his face. You can see his face. And he'll be with Kimmel, which will be pretty awesome. That's coming up in a half hour. So we are going to be kind of transitioning out, but I wanted to give a few people the last word. Questions for Sean, Ryan, Mark. Sounds like he fell off, but Mark or Sean and Ryan are here with Synapses Capital. We got the master showing up, repping DR Academy and DR Lens and all of the tech behind that. So we have some front runners here in the conversation today. Opening the questions up. See if OPSEC Daredevil wanted to jump in.
What's good?
What's going on, buddy? Do you have a question for the panel?
I just joined, so
You're like, no, bro. You just brought me up to the front of the line, but nope.
Well, actually, I do have something that I was thinking about that I actually wanted to get DR's opinion on. Right. So my theory is people say, why don't you focus on institutional liquidity? Because I only focus on liquidity of retail traders. Now, my opinion on that is one, on the S&P, there's more volume for retail traders, but two, you know exactly how they trade, and they're the most consistent losers. So why would you care about the volume of institutions if that is the case, right? What do you think about that, DR?
When you mean me, do you mean me with the DR? Or
I mean, you as someone who was in the industry and has a bit better insight on it than myself.
Okay. So, but in general, I think this theory is flawed, right? Because, like, first of all, how do you know when there is retail liquidity and when there is professional liquidity, right? So it will be very hard for us as retail traders with the data we have or we can access to make a differentiation between who is trading with, right? So I am considered as a retail trader, right? My contract size for the normal contracts I'm trading, when I'm trading ES, is around 400 or 500 contracts per trade. So how do you know if I am a professional now or I am a retail trader, right? So
can I chime in on that? So there are places that I can say firmly that retail traders would be executing. So if it's a very obvious support level, then across many strategies, you're going to see many different reasons to buy. Sometimes you'll even see an order block at that place by chance. Sometimes it's just across many different traders.
Completely get you at this point. What I want to say is just like that it's like either something you learn by yourself to figure out where are these points. I think like to coming back to the topic, it's very hard to make a data set out of those points, right? It's a lot of discretionary decision making from yourself, which can be working, right? To say, okay, these are levels where I expect to come retail traders in. And to tell you, like there was a lot of research in the 2012 to 2015 when we tried to model data, right, which are like covering all the typical retail stuff from stochastic to RSI to bull flags and all of this stuff, right? But it was dropped off because at the end of the day, also the liquidity provided from those part of the market participants was just not interesting for the big money, right? So I can tell you for sure that like the professional space doesn't care about the retail traders because it's just not like if my order gets only filled by the typical retail trader, I need like 500 people to trade against me to get my order filled, right? And you don't want it. So, but I think I mean the idea can work. It's just like in my understanding, it's very hard to define where to make the separation, right? Because I mean, I can tell you hedge funds which are working with very simple investment decision making, which comes close to retail decision making. We have that. But those guys maybe jump in with an order of 10 million, right? So I think you're right, and I think that's a valuable thing to do. But like from my side, I would have a hard time to quantify those points because they're very discretionary.
And again, OPSEC, we're talking about data sets right now. You're jumping in, but the conversation has been around predictive analytics and predictive modeling and putting together some form of classification models, whether that be, logistic regression, some sort of decision tree, neural networks, etc. So that's been the topic of discussion. And,
but I think it's a good question.
No, it is indeed. And I'm not, yeah, that's just where we're at. We're also wrapping up because we have a hard stop coming up in just a few. I want to say thanks to everybody.
Say some short comments to
Pretty please, brother. Absolutely. We are wrapping up, but we do have time, especially for you, my friend. Feel free to jump in.
Thank you. No. 2 minutes. First to the OPSEC question, just opinion. As the master says, there is not only retail liquidity. I try to see the liquidity as a rebalance of institutional money because you have to, if you are doing a hedge, you are going to check when you are going
long and you have a big position hedging. In short, ideally, you want to close the most short possible. So in general, the stop runs and the point of equilibrium in general are just the rebalance or the internal rebalance of the big money. You know, that is how I see this. But besides that, talking about the Ryan team project that is fabulous, I just want to personally, as a trader, is your project you lead as your own. I really think the bias tool is really great, but also I really think this will be like a platform. I don't know how this will work. Having the possibility to like I said before, to have the possibility to have the fundamentals in a curated, in a filtered way, you know, with the importance of the sentiment. I think that is, for me at least, I hate to consume meaningful information, and fundamentals happen today, and tomorrow it's another day. So I really think that it will be a really key. I really will pay I don't know, a monthly whatever to have some curated fundamentals and sentiment in a real way, because I really try sentiment and all are garbage for now, all useless. So that have that in mind, I think will be really great as a tool, not for the data and the testing of the AI. And I'm not talking about that. I talking like a separate tool, you know.
Well, thank you, mate.
Jump in, Ryan.
Yeah, sure.
Yeah. Sorry. I'm sorry. So I'm struggling to track your question. Is it something that you're just saying that you would like us to do, or something that should be done?
Yeah, I like to be done and should be done, and I for sure I don't will do it. That's for sure. I'm doing IA, but just for trading, not too big.
Okay, that's awesome. I mean, that's something that's definitely on the table that we are looking at. The thing, though, is that we're trying to develop the model so that we can make sense of it. So as of right now, it is something, like I said, is on the table. We're looking into it. But right now, our focus is strictly on and then perfecting that before we move on to the next task.
Nice, man.
Yeah, for sure. I'm talking in the future, but this is awesome, dude. I will follow your step, because this is the real deal for sure.
That's awesome. Well, thank you, man. I appreciate it.
No, you continue. Hugs.
Do you know what? I'm feeling something special coming on.
And what's that, mate?
Go on, Ryan. Do your thing. Just do it, mate. He's inspired us. Just do it.
All right, guys. So this what we're going to be doing is Kit is going to be posting a tweet. And what we're doing right now is we are opening up 50 spots in a Telegram so people can have access to Ann. You'll find the Telegram link in the tweet that Kit's going to be putting out. So with all that said, thank you all for listening to us. Thank you all for hopping on and asking great questions. And we just want to wish everybody here a great weekend.
Nice. Guys, in about 20 minutes, that's awesome. I mean, that sounds great. Open it up, see what it's all about. And I'll follow up with whatever once we turn off YouTube and Twitter. I'll post the link, and you guys can give it a try, see what it's all about. Synapses Capital, what we are talking about then is a bias, right, on 10 major Forex pairs, correct?
I believe it's 9, but yes,
9.
10, and we are going to be increasing that list, as it was mentioned, I think, a little while ago, that we will be adding indices. We're almost complete with that. We'll also be adding crypto as well. We almost released the indices, but we weren't satisfied with the statistic. So we felt like we needed to tweak some things. But from the phone call I've had with the other days, that we are getting a lot closer, and we are pretty satisfied with what we have thus far. But we just want to push a little bit more.
Nice. Nice.
Brian, we were speaking earlier. What was the results by any chance on Euro last week?
I believe it was 5 out of 6.
Nice.
What, so 5 out of 6 all
So,
week?
so walk me through. You get a.
Okay, so we have a Telegram, right, that Anne is connected to, and so what she'll do is that she'll release the forecast for the day. And so what Sean's bringing up is that for one of the pairs that she listed was euro dollar, and starting last Thursday, she got Thursday all the way up until yesterday. She nailed 5 out of 6 times with the daily sentiment.
Nice. That's definitely helpful.
Yeah, and also for the speakers, it comes out at I think it's 7 minutes past 8 every day, give or take a couple of minutes. But yeah.
Okay.
Keep your eye peeled, guys.
I forget choose a comment if you like to take, maybe you already do this, Ryan, but choose an idea, you take it or not. When you are building the model of the indices, you can try to create an algorithm, a sub mathematical function that give you the force and the equilibrium of each indice, each indice by separate. So then you go with the three, for example, S&P, Nasdaq, and the US and the Dow Jones, and comparing these three together, you will have not as an indicator for sure, but you will have the relative strength talking about just in price. So you will have daily not only the bias, but at the same time you will find the lead, the index that is leading the price today. So I think the model in indices maybe can be a little more easy than a forex pair, because you have that advantage to know, okay, if this is the lead and the lead is going higher, okay, maybe we have another confluence to think.
Yeah, like relative strength or SMT. Relative strength.
Not only the SMT, but in general
No, I got you, buddy.
Example is the Nasdaq all this week,
I got you. Hey, we got to wrap up here, buddy. All right.
Great. Yeah, for sure. Say from me, guys. Thank you very much indeed for having us here today. Thanks for all the speakers that we had. Master, me and you got to have a chat. Kit, always a pleasure. And again, thank you for letting us use you as a jump platform. And we appreciate that so much.
No problem, buddy.
Thank you, everyone.
I thought it was a good combo, and we want to have a lot more like it. AI and technology. We did it on a Friday. We got a funded Friday with JCap coming on Trader Roundup at Trader Roundup on YouTube. We'll simulcast that on ICT Concepts as well. ICT Concepts Explained, and give it a like, give it a follow. Push that button. Rod, you want to close us out, mate?
Yeah, it's been an absolute honor. Interesting conversations, profound insights. I'm so excited about what you guys are doing. And again, I want to thank you for coming on stage and releasing to this world. I mean, this release is exciting. I'm super excited to see how it progresses. So onwards and upwards, together we're stronger.
Indeed, and also, Rod, further to your point, I love what you were talking about with the potential interaction of I don't feel so good today, or one thing or another. I'd like to talk with you more on ideas around that, because there might be something that we can do together.
Yes, let's do it, brother. Slide into my DMs and we can make that happen.
All right, lovely. Thanks very much indeed, gentlemen, ladies, everyone. Cheers.
All right, cheers, guys.
Nice. Trader Roundup, affirmations and models. Special thank you to my buddy, my friend, the master from for being here. For Sean, Ryan, Mark, thanks Billy, thanks Flowing Key, thanks Angelo, thanks Manos, thanks for the breathing and the affirmations nice and early. Jump over to our YouTube page, guys. We're trying to create that kind of vibe. This market's been shit. The price action's garbage anyway, so go figure. It keeps you occupied. Anyway, Funded Fridays, 11 o'clock, Trader Roundup on YouTube. This was Affirmations and Models with an AI technology follow through. Thank you very much again, everybody. Have a wonderful rest of your day, and we'll talk to you again soon. Peace.